Last year, of course, you saw a record jump in optimism. This year, you're seeing a record jump in pessimism. To your mind, what are the primary factors that are driving that bubble?
So it's easy to understand when you think about the magnitude of risks and threats that are out there that continue to increase right now. So the combination of perhaps a difficult economy, the combination of the debt levels and an increasing interest rate environment, the geopolitical issues in terms of some of the trade issues and the barriers that are being put up right now, and then add on to it a number of uncertainties relevant to broader policy issues like Brexit and the like. But it's not limited to just the US or the UK right now. It is a phenomenon around the whole world. So those issues are just compounding itself. It causes then a concern of the CEOs to say, how do I manage through all this? I've not dealt with it before. But it's interesting to think back. Actually, the last couple of years, they've actually had a tremendously positive environment to operate in. And actually low interest rates, excess of cash, et cetera, have given them, I'm going to argue, Tim will argue as well, probably a baseline that was not founded. It was probably an unusual element where people believe it's the new norm. Maybe the past was the norm that we actually should be thinking about in terms of how we look ahead.
Right, same with volatility in the markets, I think you could argue. Tim, I want to ask you specifically about the US, and I know this isn't a question that you specifically posed in the survey. Is President Trump viewed as an asset or a liability by the U.S. business community?
So yeah, you're right. We didn't ask that question. We talked to hundreds of CEOs, and what I tell you is, when they talk about our president, they talk about some really good things that have happened. Tax reform was viewed very positively by the business community, desperately needed to put the U.S. on equal footing with the rest of the globe, get money back in the United States, a fund investment, something CEOs felt really good about. CEOs felt really good about just the fact that business was relevant, that they were at the table to deal with some of these solutions. They felt great about that. They also felt great about being focused on deregulation and unnecessary regulation to lower costs and put money back into employees and businesses. Now, on the other hand, they like certainty, as we've talked about. We see in the survey, and we look at trade, there are some issues that need to be dealt with, so they support dealing with the issues, but maybe a little bit different way of getting it done, a little more certainty. And then clearly immigration is a big thing as well that business communities focus on. All of our CEOs we deal with, they're for thoughtful immigration, but they also want to make sure we don't lose access to tremendous talent workforce.
Well, and also we've seen more and more companies speak out about the shutdown, for example. I think Kraft was out with an ad. There have been a number of other companies that have spoken out about it.
First, to Tim's point, not only are you hearing that from the CEOs in the U.S., but actually CEOs outside of the U.S. actually see some positives. He's putting some hard issues on the table. And I can give you one example where a CEO said from another country, President Trump has done more for my organization than my own leaders in my country, putting the hard issues on the table. And now you can question the tactics to do it, but I think it's important to get these issues and to have the candid dialogue.
One of the things we learned a lot when we talk to CEOs is they never say all or they never say none. There's a lot of things they like that need to be dealt with. There's other things they'd like to see a little bit done differently. And to your point about the shutdown, the government themselves put out a prediction. They said every week we're losing 1/10 of 1 percentage point of GDP. We're now in our fourth week. That means we lost 4/10 of a point of GDP growth. That's real and that's significant. So that is something people are concerned about. And a great example of that is IPOs are being slowed down because companies want access to capital markets, but because of the government shutdown, we're seeing a slowdown there. So it is important for us to realize government and business aren't separate, they're intertwined.
I want to ask as well about when you asked companies where they're going to take their business, where they see growth. Some of them said they didn't know, a decent number, or that they had no plans to invest in particular countries. So where is that money going? Where's that CapEx going?
It's going to a lot of different places. It's actually going in the pay down of debt. We see organizations trying to be prepared for a rising interest rate environment and deleverage themselves. It is going to the investment of, for example, reskilling their people and actually thinking about what that future ultimately may look like so it can be resilient as well as fit for purpose going forward. It is going to how do I rethink my own brand and what I'm doing in my countries. So it's going all over the place, maybe just not in the M&A we've seen in the past, maybe not in certain countries we've seen in the past. There's others that have said, I'm going to sit on this and then think about how do I get certainty and then invest it as well later to be better positioned for the opportunities.
Yeah, no, I agree. I think at the end of the day, this is a new phenomenon in the survey. We've never seen 23% either not investing in another country or not sure. So we'll see how it plays out, but there are plenty of other uses for cash at companies that Bob went through. And companies, one thing from the survey that came through loud and clear is their focus on investing in themselves, and we're seeing that.
Bob, Tim, thank you so much.
Thank
really
you.
appreciate it.